Hello, investors. Thank you for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Today, I have an exciting stock to talk to you about, Perion. I'm not sure if you know this company. It's an ad tech company. So yesterday, they put out an announcement that investors are kind of like didn't really care about, but I think it's actually quite interesting. So I'm going to go through that. Essentially, the company has brought forward their guidance for by more than a year and a bit. Yeah, so and the stock still trades approximately 1 times forward sales. So I think that's quite exciting. So I'm just gonna just jump right in and give you some context. So here's some of the peers. Perion is probably the only, well, aside from the traders, is probably the only ad tech company. Probably if you add in Iron Source, maybe. But anyway, it's still probably the only ad tech company that's actually put out some positive growth rates of 40% in the past 6 months. You can see here the rest of the group. You got Magnite, you got a company that I own, which is Digital Turbine, Tremor, Pubmatic. It's just been like, bah, like investors wanted nothing to do with that tech space. But Brian has actually done something significantly well. Back in the summer, I said that Brian is growing at a rapid clip. It's profitable and cheaply valued at just 1.4 times this year's sales. Now it's a nudge more expensive right now, but I mean this is really like not significant at all. So they've put out their press statement that they were raising some shares, selling some shares, raising 100 million and $100 million, and they put out their guidance for 2022. The guidance for 2022 points to approximately 29% compounded annual growth rates. Okay, this is really quite significant. So back in the summer, in my previous article, I highlighted how by 2023, Perion was going to be growing and reaching 500 million of revenues. They were on a compounded annual growth rate of 15%. Kind of okay, yeah, nothing to write home about. Now, by the end of 2022, they're going to be meaningfully faster than that. They're going to probably hit approximately 610 million. This is really exciting, people. So, what does Perion actually do? So, Perion has three different segments that it operates in. It has search, which is kind of combined with Microsoft, and it has social and the highly coveted CTV space. In the announcement yesterday, they talked about how CTV, including the acquisition of Vidazu, I don't know if I pronounced that right, is up 115% year over year on a pro forma basis. Now, any serious investor in ad tech will know that the golden goose right now is really CTV. Okay, so you can read about it in the trade desk. I've got some articles on that, and this is it in effect, right? So if you think about it, advertisers need to go where the eyeballs are. The eyeballs are moving much more towards a digital format. The ability to really engage the consumer has to be where the consumer is, right? You can't go to social media advertising because that's really prohibitively expensive. So you can't go to the offline world because you have no way of really measuring the impact of your advert. There's no way to interact with the end user. So if you followed Snap's results from Q3, this was the problem with their results. They didn't have a way to really give advertisers a way to measure their performance. And because this is in the background, there's all the IDFA changes that have impacted how people attract and all this stuff. So CTV is the one of the few places that people can go to where you can get high ROIs. And what happens is that the actual cost for the advertiser to reach a large number of eyeballs is quite small relative to what you can do elsewhere. So it leads to very high ROIs. That's why in ad tech, everybody's chasing after CTV revenues. Okay, so why would you pay a premium if you wouldn't know which advertiser you go? So you wouldn't. That's why all these kind of ad tech companies are doing so well, because they're able to chip away at the offline advertising world. Because in the advertising world, you have no idea. You see an advert on the train. I mean, who cares about that? Like there's no way to influence, to engage, to interact. So that's why Perion is doing something quite well. So along these lines, if you're able to show to advertisers that you're able to have meaningful engagement and meaningful ROI, that would inevitably see at some point in time an uptick in customers, or even an uptick in probably pricing power. And guess what? In yesterday's results, they talked about that not only have they seen pricing power go up, they've seen customer retention stay high. So with those two, you should expect to see an improvement in operating leverage. And that's what we're going to talk about next. So here you can see, relative to 2020, EBITDA excluding traffic acquisition costs, TAC, traffic acquisition costs, were 25%. going into 2021 for like pretty much the end now is 35% EBITDA margins excluding tax, and for 2022 also 35%. So you still see a meaningful progression. Now let me caveat that, okay? So this is EBITDA excluding traffic acquisition costs, because Perion doesn't have a lot of control over his traffic acquisition costs. So just for context, for Q3 21, the EBITDA excluding traffic acquisition cost was 37%, but the actual EBITDA that you and I would look at was 14.5. So you're looking at the more than 2,200 basis point difference. And the reason for that is the traffic acquisition cost that they don't really control. That being said, they talked about in the press statement that on the back of the EBIT, in the back of Perion's iHub project, they're able to reduce meaningfully traffic acquisition costs. That's why you're able to see the fattening up of margins. But it's not so important to try and get the nuance really of how the EBITDA margins excluding traffic acquisition costs are going to fall. It's much more to see the progression. You see top line progression, growing revenues, EBITDA margins fat. That's really, really good already, right? There in and of itself. Now, here's some numbers. So Perion is guiding for 2022 to be at 610 million at the top end, okay? If we factor in the 100 million of share dilutions, you're still kind of around about a 1.5 times forward sales multiple for a stock that's growing approximately 29-30%. Just for context, if you look at Pubmatic, its price is 7 times forward sales. Magnite's had a horrible year this year. It's now priced at 5 times forward sales. Remember when Magnite was the one that like everyone was like coveting over? Anyway, that's now at 5 times forward sales. So in that context, obviously you can throw in the trade that's not really like for like. It's not apples and apples, but anyway, just however you cut it, this stock is cheap. Yeah, so I mean, this is not investment advice, and this is just for entertainment purposes. But however I look at it, I think that this is a trap. But in any case, it's up to you. Take it or leave it. And if you want to find out what kind of names I'm interested in, don't forget to check out my marketplace called Deep Value Returns, where I help you become a better investor. You can check out my reviews, see what other people have said, and yeah, find out what stocks I'm buying right now. Thank you so much for listening.